Welcome, ladies and gentlemen. Greatly pleased to have you all with us today. Thematic investment solutions in the ESG segment is our subject of today. So I'm greatly pleased when we have all with us to have this highly decorated panel with us today. I start with Michael Haupt. He is head of AMCs and thematic investments at Vontobel. Kenneth, Lamont. He is senior analyst, manager research at Morningstar. And Dr. René, Nicolodi, head of equity and themes at ZKB. Myself, I'm Christian Trixl, country manager Amundi, Switzerland. I'm greatly pleased to be here with you. For the conduit of our session today, which will last 40 minutes, we will start with a short introduction of yourself. First, about yourself, about your company and your mission, so you get to know our speakers better. Then I will have a short introduction into the subject to set the context. And then we will start with the Q&A. And please, finally we are here for you, so it is your panel as our duty at the same time that you leave this room after 40 minutes with a lot of valuable information. Okay, thank you. Can I start maybe with you, Michael?
Certainly. So, first of all, very happy to be here today. I'm representing Vontobel, and I'm pretty sure that everybody in this room knows Vontobel. For those of you who are not from Switzerland, we are pretty much doing everything in the financial industry value chain, from issuing structured products to asset management, fund management, towards our wealth management. I'm responsible for distributing actively managed certificates, or AMCs, and thematic investments to our institutional clients, meaning external asset managers here in Switzerland. And I'm very happy to provide you with a few information about the latest trends we have seen in terms of flow, where do we see demand from investors, and where not so much.
Thank you. Kenneth?
Good afternoon. My name's Kenneth, Lamont. I sit on the fund research team in London for Morningstar. So it's sort of the bread and butter of our company, but as you know, we are a big data company. We own Sustainalytics as well. And I technically sit on the passive research desk, so that's where my expertise has been focused for many years, but over the last couple of years, I've broadened my remit out to cover sort of all thematic funds, so building out our view on both active and passive, and sort of how do we evaluate these funds.
Thank you. René?
Well, thank you very much as well for having me. My name is René Nicolodi. I'm representing ZKB, or ZKB Asset Management. So ZKB is one of the larger banks in Switzerland, obviously, and ZKB Asset Management, the second largest asset manager in Switzerland, with roughly AUMs of 255 billion. Myself, I'm heading up the equity department, which is a department focusing on fundamental strategies, sustainable strategies, so thematic strategies as well since more than 20 years, and private equity and rule-based quantitative strategies as well. So pretty large department focusing on the different angles of equity investing.
Greatly pleased to have you. So a very short note to set the context itself. I think it's fair to say that the SDGs was a foundation for ESG investments. Remember back in 2015 when the UN set 17 SDG goals, Sustainable Development Goals, to fight poverty, protect our planet, peace of humans, gender, equality, etc. You see underneath then all these 17 goals actually which were set. You cannot read it, I know, apologize for that, but factually in a nutshell, I think that was the big catalyst for investment managers to produce for the demand we have seen then from private clients but also from institutional clients. Now, it's not over yet. How do we find some points of orientation? Surely you know about the COP 28, COP29, COP28, which took place in Dubai, which gave us further guidance. Mainly the takeaways from this big get-together was finance energy transition, the end of fossil fuels, and it was all about, how can the world help to make it more sustainable in terms of energy and energy transition. Then in 29, the upcoming one, which will take place in Baku in Azerbaijan, there's another indication which helps us also to already prepare ourselves as investment manager, as asset managers. This will go again in direction of energy transition. And a very special element will be also how do we finance it? And that's then, let's say, part of our job to make sure that we can transport the finance, that we can transport our investments and help to finance in this direction as well. So this is it in a nutshell to set the context, what we will use the ongoing time for the questions we have prepared for you, and then, of course, please jump in as well. So with this, I would like to start with the first question. Responsible investment is here to stay. What trends do you observe in the market in terms of products and innovations? And maybe let me start with Kenneth.
Well, if you'll allow me, I'll lead with a blatant plug. My colleagues just last week published a wonderful paper, Investing in the Times of Climate Change. It's free, you can go and download it. But really, this is a good place to start. So we're looking at climate change or carbon-based funds. And one of the headline takeaways from that report is that more than 50% of all net asset inflows into funds globally last year went into carbon or climate-aware or climate funds, which is definitely noteworthy, and that somewhat bucks the trend of what you might have heard or read in the news. But that's a good place to sort of start. And so clearly, when we talk about innovation within the space, a lot of it relies on improved data. And we've seen a huge improvement in data and a huge expansion in the data set that's available sort of out there, but that sort of feeds in. Now we have the ability to be far more targeted in the exact type of investment we want to make as investors, whether that be hydrogen, whether that be targeting just solar. We have products out there that will allow you to do that. But the one I just wanted to highlight more than anything is actually quite obscure in some ways, but it's a Spark Change Carbon ETC. So if we're talking about innovation, this is a fund that actually goes in and buys carbon paper in the EU sort of traded market for carbon. And unlike other products that existed, which use derivatives, this actually goes in and takes that out of circulation, so actually increases the cost of carbon for or carbon emitting within Europe. So I just wanted to give that as an example of some sort of, particularly in the carbon space, some innovation which I think is worth highlighting.
Thank you, Kenneth, for this bit. René, what type of preparation, back on the information you have, are you planning to roll out in terms of new products, innovative products?
I think what is important is to understand when you look at themes, what kind of dimensions you need to take care of to understand if the identification of themes is more or less attractive. So flows is obviously one, but let's say the AUM, the concentrated AUM within a theme is another one. Then obviously deriving from that, you look at profit pools, you look at the competitive structures in order to understand in as much a theme for the long term can be successful. Obviously the implementation, do we talk about active or passively managed themes? Do we talk about Article 8, 9 or 6 funds? Makes a certain differentiation in the analysis and identification of themes. So when we look at themes, at the end of the day, we seek, let's say, long-term secular growth themes. So for the longer term, we seek a certain thematic breadth in order to be able to cover themes more from a diversified angle, where it gives us more opportunities to also, let's say, go through cycles and market movements. And thirdly, find themes that are somewhere between mature and emerging. Let's make a few examples concretely. Healthy longevity, maybe beyond pure healthcare and consumer trends. Let's think about circular economy beyond biodiversity, for instance, or think about transition, energy transition, or transition to a digital economy beyond AI or machine learning, or energy transition beyond climate. So these are the things that we're looking at and thinking about moving into certain areas in the future, short-term future.
Let me also give you a bit of flavor from our Vontobel perspective. We have quite a broad offering when it comes to thematic investments. We have around 80, or in the meantime, more than 80 different open-ended investment strategies. And we have seen some 5 or 6 years back that there was a huge hype around sustainable investing, ESG investing, impact investing. We have launched Circular World, we have launched Climate Impact, we have launched in the meantime hydro, wind, solar strategies, you name all of them. But all of a sudden it stopped. There's no longer a significant demand from clients towards these strategies. And you also see it here if you go down to the fair. I mean, if you look back 2 or 3 years or even before Corona, everything was labeled green. At every booth you had something green. Everybody was talking about climate and impact. It changed. It changed towards technology, which is of course also a mega trend, which is of course also a highly relevant thematic investment. But we have gone from this sustainable things towards technology solutions and this multipolar world solutions. I'm not saying it's not coming back, but for the time being, the demand from our clients, what we see, is very much limited.
Could I just chip very briefly in on that? So part of the story there is clearly related to interest rates. Thematic funds, by their nature, are trying to invest in future growth. They have a growth bias. They tend to be very sensitive to interest rates. So I think that's part of the story. Of course. It's not necessarily a change in mentality across the board, but more just taking a foot off the accelerator.
So to put it very bluntly, I mean, themes are high beta, are cyclical. Markets are cyclical. Therefore, in a uptrending, risk-on environment, which luckily, usually we have that, themes are an opportunity or a good diversification in a portfolio, whereas in times of uncertainty, where the market is more shaky, maybe more risk off, or certain unsecurity is there, the beta comes down and the request from particularly wealth management clients within thematics goes back. So that's a little bit the cyclical nature of thematic investment. For the long term, I think very stable area of growth for asset managers to be in a successful way.
Very interesting observations. Thank you very much. So performance is an issue. Performance is also expected, being as sustainable, impactful, sustainable, responsible as well. However, one thing which I hear more and more from investors is also how impactful are the liquid strategies in net zero, in climate-related investment vehicles as such. Is it maybe something which you observe as well, that people expect more impact, going more type of illiquid instruments, maybe more directed instrument, which are more in probably a subject of private markets?
Yeah, you're absolutely right. And I couldn't agree more what René said on the cyclicality of thematic investments. But another thing which comes down to all these green strategies is that there were some sins of use, that everything was basically labeled green. Everybody had a sustainable, everybody had a green strategy. Every fund was labeled green because the demand from investors was quite there. And at the end, it was clearly shown that not all green strategies were really green or had an impact at all. And what you see nowadays is, of course, also a change in view from investors, that investors are really looking for this impact. Which impact do I generate with my investment? And you have different tools on the market, independent tools, but also the asset managers, as probably ZKB, as we also have, that you really see which impact generates my investment. That you see how much CO2 is reduced based on my investment, how much kilowatt hours were produced with my alternative wind, and so on and so forth. But this is clearly changing, that you really want to see what is my investment doing good for the people and for the planet.
Thank you. You want to add?
Yeah, I think today it's becoming dangerous to talk about impact in general terms. So we need to be careful with the terminology and understand what it actually means, both for liquid investments and on the other side for non-liquid private markets. So when you generate new capital, be it private equity, green bonds, you generate new capital for a certain purpose that can be sustainable or not, but you generate potentially an impact. On the liquid side, you could do that as well with an IPO, for instance, generate new capital, or you do engagement with a company and are able to show that if you haven't done engagement, you would have not realized a certain impact. So that becomes more complicated. Other than that, I would rather talk, or at least we at ZKB, would rather talk about, say, impact alignment or purpose that you have within the liquid space. And obviously, engagement and stewardship is an essential part of moving the economy and companies from one end to another in a transition, let's say, way or context.
Interesting. When you talk about purpose, now more and more you see upcoming passive indexing investment. So would that be exactly that they miss a purpose, or what you say, active versus passive? What do you suggest them to?
I absolutely think, I'm convinced. Obviously, I have an active head on my shoulders, but besides that, I think that both forms of implementation of a theme can nicely coexist. I would then go into the challenges. Let's put it that way. I mean, themes and sub-themes are highly dynamic usually, so they play for a long term. But in between, you have lots of volatility, of exaggerations, for instance, and therefore an active approach to manage these cycles and exaggerations has certain advantages. Then the second element is growth doesn't equal profitability. Okay, it means that a lot of these companies, pure plays, are usually small, mid-cap sized companies. So you have at certain times limited data availability to understand the business models. You cannot just go rule-based. You need to understand, and you need to have expertise and understanding the theme. That helps you to go into the fundamental questions: entry barriers, technology, regulation, competitive environment, in order then to make a fundamental call for or against a theme, a sub-theme, a certain company. That again helps you to manage in a downside market movement certain movements of companies and sectors, and helps you to identify opportunities on the upside. Therefore, there's a strong argument for going active into themes, because the information asymmetry and the information efficiency around themes is less than, say, SPX 500 market.
I tend to agree, but there's also plenty of room for indexed, for passive solutions. I mean, also for passive investments, for this indexed, or where you have an investment which is linked to an index, you have quite a large active component. In having an index, I think it's crucial to understand that for defining this index, you also need to do your homework and see what are the core elements of this industry and what are the fundamentals of the industry and of the companies to be included in this index. Because in an index, we don't want to have all the companies included as the MSCI World or S&P 500. So only the companies included which really belong to a certain topic, be it hydrogen or be it climate impact. And then you have your list of fundamentals, and these criteria are applied on a regular basis. So it does not mean that once an index is constructed, that it's always the same. You have rebalances, and they take place on a regular basis, be it semi-annually, be it quarterly, and then you adjust your index as well to a fixed component, right? And then the second element, making this also active, is timing the market. Of course, always difficult, and everybody tries to time the market, but when you see that there are tactical investment opportunities around, why not increase the allocation to a certain sub-team or to sustainable investments overall?
Very interesting. Can you ask?
Well, yes, sorry, I mean, as someone who's looked at as coming from a passive angle, I might say a couple of things that are a little bit controversial. And one is that I would argue that all passive thematics are essentially active, but just a bit less flexible, which they're also a bit cheaper. There are reasons why you might go for one or another. And then the second point really is just when you're looking at impact. And again, coming from a passive place, I think there's a huge space in the market for passive sort of ESG investments. But if you want the most impact, I don't think passive is the correct vehicle for you to have that level of impact.
Can I just ask you now on the back of your input, how as a research manager, how do you find orientation? We have thematics, we have active, we have all the range of, going through the ranges of climate, green bonds, including indices. How do you find the orientation? Or would you suggest from time to time to simplify things, to get back on track?
Yeah, it's very easy to build more and more product, more and more data, more and more shades of green. I would say that I personally built a data set just looking at thematics, and it was actually agnostic to sustainable criteria completely. So we have energy transition was a grouping that we made, but it included everything from nuclear, which again many in this room would not consider to be ESG, or energy transition metals. So as in, these are tools that you can use to profit from the development of a theme, but many would argue are actually not green at all. So it's there. So I'm actually muddying the water even more here, but I'm just saying I think it matters a lot as an investor where you're coming from, or where your investors are coming from. Mm-hmm. Are they looking for impact? Are they looking to take risk for that impact? Mm-hmm. And so a lot of it is how we take a complex world and frame it and make it simple and pass it down the line, I think.
Maybe a very short answer from a practical point of view. I think when we talk about more narrow themes, more niche themes that you want to play maybe also opportunistically in the market because you see an uptrend for the next, 3, 6, 12 months, ETFs, active, passive instruments, AMCs, whatever, are a good tool. Cheap, are there, you get exposure to the theme. If you want to go into a theme for the long term, you want to play up a certain allocation in your portfolio, you want to play climate change, water, but for the long-term secular growth theme behind it, I think it plays to select the best active approach. And then the problem becomes another one, obviously. Who's the best? And what does it mean to be the best over a long term in a thematic context?
Talking about
and when you talk about, sorry to interrupt you, but talking about long-term and this long-term nature of climate impact or impact investing in general, then we are back again to the square of illiquid investments, where we have seen over the last couple of years a substantial rise in demand. We at Vontobel, it's a core talking about liquid investments. That's what we have done for many decades. But what we see increasingly is the demand from our client, be it institutional or private wealth, towards illiquid investments. We have acquired a significant minority stake in an infrastructure provider with around 4 billion in assets under management, and this is also a sign that we are heading, or that the industry in general is heading into this direction, to align this long-term focus of climate impact investing and this long-term nature of illiquid investing strategies.
It's an interesting observation, thank you. Now, one thing which, I don't know how many pension fund and institutional representatives we have here in the room, but it seems to me that the private clients are tended to be a bit a front runner, especially when you look on the thematic type of investment solutions. At least in my view and in my experience, I saw more private clients, private banks jumping into this subject. Talking about Swiss pension funds specifically, we see this SVVK exceptional list, which is now getting to a common standard. There are roughly 18, I think now, stocks which are excluded from the index. But would you say that pension funds in itself are a bit laggards to support ESG, René?
Well, on the pure thematic side, obviously it's not their main priority to go into themes. That's absolutely clear. As it is not their main priority to go into alternatives, private equity, and any other alternative class. That's just not the normal playing field of the average Swiss pension fund. And you can see it by the numbers. It goes a little bit in the right direction. Well, let's take the example of private equity, 0.8, 0.9%. That's the average allocation of private equity of Swiss pension funds. Now, with the theme of sustainability, obviously, pension funds have jumped on the bandwagon because they have to, because of several, let's say, frames and contexts and regulation that is pushing them towards that topic. And with it, the theme of decarbonization, the theme of climate reduction, and with it, a series of other sustainability-related themes comes slowly but steadily into the, let's say, asset allocation framework and question of pension funds. It starts slowly, but it's moving in the right direction. I would frame it that way.
So you would actually not say laggards, but it needs a bit more time.
Yes.
Right?
And then the implementation would be probably a different one than, let's say, a pure storytelling, emotional approach that is obviously the one that we probably use most in wealth management, which is perfectly okay for a variety of reasons. On the institutional side, you approach the themes with a different mindset and different implementation and let's say, selling approach.
Well, and what you can also see is that the further you go to the private client side, the more it is driven by the news flow you see every day in newspapers, Financial Times, Bloomberg, whatsoever. I mean, we have seen it 1.5 years ago when this ChatGPT thing was launched. Everybody was talking about artificial intelligence. It was, of course, already there, but nobody had an investment theme ready. And then over the next couple of months, everybody wanted to invest in anything related to artificial intelligence. So you had a lot of strategies coming up. We, of course, did the same, have been quite successful in raising money. But it's not the topic. I mean, retail investors tend to focus and invest in things what they see on a daily basis. The closer they are to a specific topic, the sooner they invest. And if you go to the other side of the spectrum, it's more focused, it's more detailed, it's more also about risk management. And this risk management, I think it's also something Kenneth can tell you, is sustainable investing or impact investing is also part of risk management, that you exclude certain types of investments where you reduce the risk in the portfolio. That is what we have observed.
Yes, I think Michael's making up a great point, and pension funds tend to look at risk first. They're looking at sort of long-term trends. And it takes most of the thematic funds or propositions that are out there are high beta, high risk. And it's not a natural marriage, you could argue, between the two. But actually, there is an argument that these could be held as risk reduction if you reduce your exposure to traditional energy and you increase your alternative energy exposure over time using these products. So there are possibilities, but I certainly don't see that as a widespread practice at the moment.
Thank you. Now, since we are here not only to touch upon growth and shiny subjects, a bit more a sensitive one. We had recent cases, 1-2 years back now in the meantime, of greenwashing. We had then an absolutely a clear reaction from asset managers to move a lot of SFTR 9 classified funds back to 8 or even 6. Apologize, we can elaborate for the ones who do not know this taxonomy of classification. But finally, do you think that regulations are up to speed in this context, are helpful for asset managers, maybe also for investors, or you still feel it feels from time to time it's a moving target with a lot of political elements coming from the European Union? What's your view on that? Maybe, I don't know who wants to start, Kenneth, or...
It's a great question. It's a sensitive question. I speak publicly quite frequently, and I say the most common question we get from audiences like you is, why can't you just make up your mind? We just want to know what's ESG and what isn't ESG. And as a provider of insights and data on ESG, we would say, look, it's a market. There is no one ESG. You have to decide what you want and which sort of provider would sort of make that decision for you. It's a market solution to some degree. But I've softened that stance a little bit, and I think there is demand from both asset managers in the market and, well, in fact, all market participants to have at least a base framework from which we can work from, because of the greenwashing thing. And just one more element, I mean, there's genuine fear. I speak off the record to many asset managers. If you look at what happened to DWS, you've got the police coming in and raiding offices. There's genuine fear, and so it doesn't help if you don't have a clear guidance from the regulators in that situation.
René, you are in the spotlight of commercials and political elements.
Yes, that's true, and obviously greenwashing has been one of the most inflationary terminologies for the past few years, and it arises a lot of insecurity and sometimes fear. But I think it's over-exaggerated, to be honest. I mean, you need to take care because it's about credibility and reputation, therefore it's very important. At the same time, I think if we focus on just executing what we're saying and saying what we're thinking, well, you should be fine, to be honest. Now, that's said easily. The complexity of a production process are huge, and you can run into troubles. From the regulatory perspective, I just think, how should I put it? Let's maybe an example. I mean, how many stocks are there around listed on the stock exchange? You could check Novartis, Nestlé, UBS, and look at how many analysts are following up these stocks, usually between 40 to 70, 80 all around the world. Roughly 20-30% will have a buy rating on the stock, 20-30% will have a hold rating, and the rest will say sell the stock. Now, these ratings are based on highly standardized financial data reported on a quarterly level for like concepts that have been around for 50 years. And still, like, the opinion goes in all directions, and nobody has a problem with that. Okay, we don't have a problem with that. Now we're talking about ESG, not very standardized data, concepts highly dynamic moving, regulation who doesn't know exactly where to actually move, highly different from nation to nation, from regions to regions, and we expect to have one strong standardized approach. That's an illusion. That's just an illusion. What we need to focus on is to have maximum transparency of what we're thinking, doing, and acting, transporting that to the clients, and be credible as an industry on these elements. If we do that, we mitigate at least certain greenwashing elements, but we won't have one single standard for ESG or sustainability. That's an illusion.
So I think there's certain fear as well from politics, to push or focus on certain probably companies as well at the same time. I mean, you are entering in direct commercial activities if you say, well, you need to exclude certain type of companies as well.
In that moment when a regulator makes regulation that impacts the performance of a strategy or a sector, then you run into problem normally. Okay, I wouldn't have a regulator that is defining restrictions, that is defining investment universes, that it is defining capital flows in a very strict way. Yeah. Therefore, I would say that the environment that we have in Switzerland, which is principle-based regulation, allows you to deal with the realities of capital markets and then execute in a way that is, let's say, intelligent for the needs of our clients. Because otherwise you run into massive problems, and which we have seen in the EU with the taxonomy, the SFDR, and everything else that is very nitty-gritty regulated, but ends up being very cumbersome, and from an implementation point of view becomes a mess rather fast.
No. It feels like a conversation here to stay, so you will see us again probably. But with this, I would like to open to questions, please. We have 5 minutes left. Yes, please.
Thank you for the podium discussion. Since we touched on the pension funds, isn't it true, or is it just my impression that here in Switzerland and maybe also Germany, the pension funds are somehow laggards and seem to be just waiting and seeing until they're really forced to do something more actively, compared to pension funds in the Scandinavian world and in the northern parts of Europe, where they are actually definitely not the laggards, and they're those that will push for product innovation, and they do their investing in stuff which is much more beta and alpha and so on. So why is there such a big gap in my impression, or is that maybe a wrong one? Thank you.
Maybe I can start to answer. I think, yes, you're right in your statement. And at the same time, I think it's important to understand the reality of the pension fund markets across different regions. So I think the Scandinavian, I don't know it very well, but it's very much driven by a certain number of very large public pension funds with a very strong sustainability strategy that has been around for the past, I would say, at least 20 years, 20, 25 years, if not more. Now, the Swiss reality is we have roughly 2,000 funds, more, shrinking, but still a huge number, so very small funds and huge funds. And if you would make a distinction between the small ones and the very large ones, you would recognize that the large ones, the large public ones, would have a more advanced approach to sustainability, being its stewardship, decarbonization, and so on. Whereas the smaller, mid-sized funds have naturally a bigger problem. Why? Because it's complex. It's hugely complex, and there's no easy off-the-shelf solution for an overall strategic or tactical asset allocation which fits sustainability criteria and let's say investment criteria and risk criteria off the shelf for every single small pension fund. And that's, I think, that's the problem that you have within the pension funds realities in Switzerland, from my subjective perspective.
Well, also from my end, I think it's a very interesting and accurate observation, and I'm too far away from regulation and from pension fund business at all. But if you compare also the different societies, Scandinavian against German ones, and also Switzerland, that they are much further in terms of 1 or 2 steps further in terms of agreeing on climate change and doing something about climate change. And if you have the pressure for basically the clients who benefit from the pension funds at the end of the day, then there is more willingness to go in this direction.
There's one element which we haven't touched on today, and this is engagement. And actually, this is one area that I think pension funds, even if they're laggards, can actually have more of an impact. So that's reaching out to the companies themselves, interacting with them, putting pressure on them. Particularly if you have a huge asset base, and even if you invest in sort of broad indexes, and you're not prepared to start excluding companies because that's complicated, you might be affecting your risk-adjusted returns, etc., going forwards. But you can actually really cause some sort of problem by standing up at every single meeting and voting against certain sort of resolutions. So I just wanted to add that as well. When we talk about ESG investing, it isn't just buying and selling. There are other elements here as well, and that's particularly relevant to the pension fund space.
Absolutely concord with you. I mean, just think about our position in the market in Switzerland. So we aggregate roughly 30 billion in Swiss equities, active and passive, 30 billion. That means we are among more or less every listed Swiss company, we are among the top shareholders. And you can assume that within our stewardship approach, we talk regularly with every board and executive management of every Swiss company about obviously financial topics, but as well strategic sustainability topics. So we have certain agenda points which are very strongly related to sustainability issues that behind the scenes we talk about within these meetings, and then we act upon on the proxy voting AGM seasons. And that's obviously a thing that has an impact over time. It's not a quick win, but over time it has an impact.
Very important element. Use all the instruments, not only force pension funds to go in one direction, financing, investing, but also using voting and stewardship. I think that's important, not touching about the efficiency at the moment. Small pension fund, of course, does not have all the resources in place, but factually there is a lot we can probably help to do as well from our side as investment management. Any other questions? No? Then thank you very much, Michael, Kenneth, René. Was a great panel. Thank you very much, audience.